He's Moritz Kraemer, head of sovereign ratings at Standard & Poor's. Moritz, thanks for joining us today. Bloomberg has learned that possibly the two funds might run concurrently, and the value of this fund could be to the tune of 940 billion euros. The key question is, will it reassure investors if that does come true? What do you think?
Well, I think the decision is indeed imminent with politicians meeting these days in Copenhagen. We think that this is an important part of the equation, to have the rescue fund sufficiently large-sized, because many of the reforms that the periphery countries need to implement to increase their growth potential going forward, liberalization of various sectors, they take time. And I think investors would look at some comfort that there is actually enough funding available to bridge that time if necessary, if it were to become more difficult for those countries to return to the markets than politicians currently hope.
940 billion, though, some are saying it's not enough. Some are looking at the 2 trillion euro figure. Is that viable? Can we get that big? A 2 trillion figure?
I think it's politically not viable.
Yeah.
I think what we have now, 940, I think is probably more than most people would expect on a consistent basis. I think we have a transition period right now where the temporary EFSF and the more permanent ESM will work side by side. The EFSF will drop out of the equation at some point in the future. So on a steady state level, even the sort of close to 1 trillion number will not be sustained.
Yeah. You were talking at the LSE last night, Moritz. You said that Greece will probably need another restructuring. I mean, are we looking at the next 12 months here?
Well, possibly not. I mean, we have assigned a rating to the new bonds that were exchanged a little while ago, and we assigned a CCC rating, which is a fairly low rating, indicating that there is a significant probability of a further restructuring down the road, because the debt ratio still remains very high. Well, down the road, I think for the time being, the funding seems to be secured, but of course we also need to be aware there are upcoming elections, probably in early May. The outcome of which is unknown, and what the policy reaction might be of a new government coming in remains to be seen.
You said the IMF might be part of that restructuring. Could the ECB be part of that restructuring if and when it takes place?
Well, I don't think the IMF is likely to participate in the restructuring, but what we have had in this restructuring is a larger number of official creditors sort of not participating and becoming preferred or super senior creditor, effectively subordinating the bondholders, including the ECB and including also the European governments. So if there were to be another restructuring, the share of debt that is held by private investors has shrunk already. It is becoming smaller and smaller. So if you really want to make an impact, probably the public sector needs to get involved as a creditor, but the IMF is probably the least likely. It's the European institutions more likely.
So the ECB is more likely than the IMF, or less likely?
Well, the IMF has for decades been a preferred creditor, and I don't think they want to give this up, and they will not. I think the ECB is more uncertain.
Okay, Spain. Protests today, Moritz. Budget tomorrow. Could be a 30 billion euro austerity budget. Some are saying that these targets of 5.3% deficit is not possible because the country's contracting. Is Spain the next problematic piece of the Eurozone jigsaw, as Mario Monti and Merkel have alluded to in the last week?
Well, I think Spain has been very much challenged for some time. I think the situation's gotten more difficult because the fiscal outcome, the budgetary outcome last year has actually been much worse than what had been expected. Now that means that more progress needs to be made to get back to a sort of more sustainable budget performance. But there is the fine line. You need to balance sort of the adjustment needs on the fiscal accounts. On the other hand, you cannot kind of completely go into full-fledged austerity without risking sort of reinforcing the recession and going into a vicious circle. So that's a real balancing act that the government has in front.
Yields are creeping higher in Spain. Investors obviously are concerned. Is there a risk that yields could go back to the highs of around 6.9% when we were at the height of fear at the back end of last year? I'm talking about Spain here.
Well, there is a risk, not only for Spain, but for the periphery in general, and for spreads to widen further, because most of the good news is out, and much of the progress we've seen in the first quarter has to do with the liquidity provision of the ECB, which we don't expect to be repeated in the near term. So the biggest risk that we see is that the improvement in the market conditions might lead to complacency on behalf of policymakers so basically leaving the situation without having fixed the underlying structural problems.
So Italy yields could go higher as well, back to those record highs you're saying?
Well, we hope it won't, but of course the low-hanging fruits are becoming fewer and fewer for the government in terms of reform.
Moritz, thanks very much for joining us today. Moritz Kraemer, their head of sovereign ratings at Standard & Poor's.